Let me ask you something. If you've been told you're pre-approved for a mortgage, how do you really know? I'm serious, because every single week, my team and I talk to people who thought they were locked in, ready to go, only to be declined later. Offers fall apart, dreams get delayed, and stress through the roof. And why? Because what most people think is a pre-approval is actually just a surface level estimate. It might look official, it might feel like progress, but without proper documentation review, it's not worth the paper it's printed on. And the worst part, most Canadians don't even know the difference between a real pre-approval or a glorified guess. And that's where it all starts to go sideways. I'm Justin Chaussee from the Chaussee Mortgage Group, and in this video, I'm going to walk you through how to get a real pre-approval, the kind that actually holds up when it counts, protects you from interest rate hikes, and gives you real confidence when you're ready to buy. So let's dig in. The first thing we need to address is the biggest misconception in the mortgage world: pre-approval versus pre-qualification. These terms get tossed around all the time, and honestly, people think they mean totally different things. Some say one is serious, some say the other doesn't count. The truth, the words don't matter. What matters is how deep someone actually goes into your financial picture. If your bank or broker just says, "How much do you make and how much do you owe?" then run through a calculator and say, "Congrats, you're pre-approved up to $700,000. That's not a pre-approval, that's a guess. A real pre-approval means someone pulls your credit, reviews your income documentation, your tax returns, notice of assessment, and verifies your down payment with actual bank statements. It's a process and it needs to be done right. Here's what it should look like from start to finish. Step one, we take a full mortgage application. This includes everything: employment history, current income, your assets, your liability, credit history that gives us the big picture. Step number two, the documents. This is the part that most people skip, but it's the most important. You'll need to provide a job letter, a couple recent pay stubs, and at least 90 days bank statement showing where the down payment is coming from. If your down payment is a gift, we need a signed gift letter and confirmation that that money has been deposited. If it's coming from your savings or RRSPs, we need statements showing those funds too. You can mix and match gift and savings, for example. That's totally fine, but it has to be properly documented. Once we've got the full picture, we'll run the numbers. We calculate your max purchase price, estimated payments, what rates are available, and which product makes the most sense for your situation. And yes, we'll get breakdown in writing. We don't leave you guessing. But let me be super clear here. Your interest rate doesn't just depend on your credit score. That's part of it, but there are other factors. How much are you putting down? Whether your property is insured, what type of home it is, even the timing of your closing. That's why those online calculators and flashy rate comparison websites can be dangerous. They don't tell you the whole story. They just simply can't. Now, here is where people get confused. Who is actually pre-approving you? When we say you're pre-approved, it means that we've reviewed your file in detail, and based on the information you provided, we're confident you're qualified. But your lender only gives you a final approval once you've found a specific property. And if your mortgage is going through an insurer like CMHC, Sagan, or Canadian Guarantee, they won't even look at your application until there's a signed offer in place. So when you're holding that pre-approval letter, know this: it's from the lender, not the insurer, and that's the important distinction. Let's talk about timing now. When should you get pre-approved? Most people think, "Oh, I'll get pre-approved when I'm ready to start house hunting," and that's too late. The best time to start is the moment you think maybe we should buy a home in the next year or two. Why? Well, just simply because if there's any issue with your credit, income structure, or down payment plan, then we can work to fix them before it becomes urgent. I've had clients come in 12 months before they're ready to buy. We've created a strategy, cleaned up their credit, helped them budget their savings, and now they're homeowners. Zero surprises, rate hold locked in. That's what good planning looks like. Which brings me to another crucial piece: rate holds. When you get a real pre-approval, you get a rate hold. This protects your rate up to 120 days. If rates go up in the meantime, you're safe. If rates drop, we usually get you a lower rate anyways. It's like rate insurance. Now, those rate holds do expire, but that's not a problem. If you haven't found a place yet, we just renew it. As long as your documents are current and your situation hasn't changed dramatically, we're good to go. Now, let's hit on a big one. The most common way people blow up their own pre-approval is taking on new credit after they've been pre-approved. I can't stress this enough. Do not buy a new car. Don't open a new credit card. Don't finance new furniture or a 5 $1,000 couch. These things might seem minor, but they can absolutely tank your buying power. We've seen buyers lose $50,000 to $100,000 on the purchasing power because they've added a single loan after they've been pre-approved. So once you're in the process, call your broker before taking on any new credit or making any big financial moves. One phone call can save you thousands and a whole lot of stress. And here's the final piece most people forget. A pre-approval is not set in stone. It's a living document. If anything changes, your job, your income, your down payment source, or even your credit score, it needs to be updated. That's why we encourage clients to check in regularly. It's not annoying, it's smart. It means when you find the right property, you can move fast with confidence. So that's a wrap. A real pre-approval isn't just numbers. It's about peace of mind. It's about walking into a home knowing what you can afford and what the next steps are, not hoping everything lines up or crossing your fingers. And that's what me and my team are here for. If you're ready to do this the right way, reach out. We'll walk you through every step, every document, every decision. We'll never be guessing. If this video gives you some clarity or helps you think differently about pre-approvals, please hit the like button so others can find it too. Subscribe if you want some more no BS content like this, and check the description for free tools like calculators and how to get in touch. And we'll see you in the next video.